Imagine this, you walk into a vintage boutique and buy a handbag. Not a stock, not crypto, not real estate, just a handbag. 10 years later, that same bag is worth 2, 3, even 5 times more than what you paid. Meanwhile, the stock market struggled through recessions, crashes, and volatility. Sounds crazy, right? But here's the shocking reality. Certain luxury handbags, especially vintage Chanel, have quietly become one of the best performing alternative assets in the world. In fact, market data shows some luxury handbags have delivered double-digit annual returns, sometimes outperforming traditional investments like the S&P 500 or gold. And one bag stands out above the rest, the Chanel Classic Flop. Between 2020 and 2025 alone, its price jumped nearly 93%. Today we are breaking down why vintage Chanel bags are skyrocketing in value, how they compare to the S&P 500, the hidden economics behind luxury resale markets, which Chanel bags perform best as investments, and whether this luxury boom is sustainable or a bubble. Because what's happening in the handbag market might completely change how people think about investing. Let's dive in. For most of modern history, luxury goods were considered consumption, not investment. You bought them, you used them, and eventually they lost value, just like cars. But over the past 20 years, something fascinating happened. Luxury items started behaving like collectible assets, just like art, rare watches, fine wines, classic cars. Luxury handbags entered the same category. According to investment indices tracking collectible assets, luxury handbags have produced around 13% annual returns over the last decade. To put that into perspective, average long-term S&P 500 returns are roughly 8 to 10% per year, meaning certain handbags have actually outperformed traditional equities. And unlike stocks, you can wear them, which makes them a fascinating hybrid asset, part fashion, part collectible, part financial instrument. But not all handbags perform like this. Most brands depreciate, most styles fade with trends. But one brand consistently dominates resale markets, Chanel. To understand why vintage Chanel performs so well, you have to understand the brand's pricing strategy. Chanel does something very unusual. It aggressively increases prices almost every year. For example, the Chanel Classic Flop cost about $5,500 in 2019. By 2025, around 11,000 or more depending on size. That's nearly a 100% increase in just a few years. And this strategy does two powerful things. First, it instantly raises the value of older bags already in circulation. Second, it pushes many buyers towards secondary market. So instead of paying $11,000 at boutique, buyers start searching vintage platforms. And suddenly a 10-year-old bag looks like a deal. This creates massive demand for vintage Chanel. And price increases are only part of the story. The real secret lies in scarcity and craftsmanship. Luxury markets operate differently than traditional retail. They rely heavily on something economists call a verbal good. A verbal good is a product where demand increases as price increases. Why? Because high price signals status. Luxury brands intentionally restrict supply. Chanel does this through controlled boutique distribution, limited seasonal production, discontinued designs, selective retail networks. But vintage Chanel has an even stronger scarcity factor. Some bags from the 1980s and 1990s were produced in much smaller quantities. Many also used 24-karat gold-plated hardware, which is no longer used today. Collectors love these details. Over time, many of these bags were lost, damaged, or discarded, which means surviving pieces become rarer every year. Scarcity drives price, and where scarcity meets global demand, prices explode. 20 years ago, the resale market for luxury goods was relatively small. Today, it's enormous. The global luxury resale market is projected to reach over $317 billion by 2027. Platforms like Vestiaire Collective, Fashion Phil, The Real, StockX have transformed luxury items into tradable assets. Buyers can now compare prices globally, track resale trends, and flip bags just like stocks. At the same time, social media has amplified demand. TikTok, Instagram, YouTube. Luxury influencers continuously showcase rare vintage pieces, which turns certain bags into cultural icons. When a bag becomes iconic, it stops behaving like a fashion item. It becomes collectible art. Not every Chanel bag is a great investment. Some styles barely hold value, but a few iconic designs dominate resale market. Let's break down the big three. When Chanel Classic flop. This is the crown jewel of the Chanel resale market. Originally introduced in the 1950s and later redesigned by Karl Lagerfeld. Why investors love it? Timeless design, continuous price increases, global recognition. Resale values often reach 100% or more of retail price, depending on condition. Some vintage versions even sell for far more than their original price. 2. Chanel 2.55 reissue. This bag is beloved by collectors. Why? It's the closest design to Coco Chanel's original creation. Vintage examples with aged headwear are especially valuable. Collectors treat them almost like historical pieces. 3. Chanel Boy Bag. This bag launched in 2011 and quickly became a modern icon. Its resale performance varies more than the classic flap, but limited editions and rare materials can command strong prices. Now let's compare the numbers. Over long periods, the S&P 500 has averaged roughly 8 to 10% annual return. That's excellent for a traditional investment, but certain luxury assets have matched or exceeded those returns. For example, some collectible handbags have averaged around 13% annual returns in recent decades. In specific cases, the performance is even stronger. Where analysis found the Chanel Classic flop increased about 93% between 2020 and 2025. That kind of appreciation rivals some of the best performing tech stocks. But there's a catch. Luxury investments behave very differently than equities. They are less liquid, harder to price, dependent on trends, which means they can be risky despite impressive returns. Before you start treating handbags like stocks, there are several major risks. When counterfeits. The luxury resale market is flooded with fakes. Some experts estimate up to 60% of vintage Chanel listings on open marketplaces may be counterfeit. Even experienced buyers can be fooled. Authentication is critical. 2. Condition sensitivity. Small flaws dramatically affect value. Scratches, corner wear, tarnished headwear. Even minor damage can reduce resale value by 40% or more. 3. Market situation. As more people treat handbags like investments, supply increases, which could eventually slow price growth. Some collectors even worry the market could become overheated. So, the big question is vintage Chanel truly a better investment than stocks? The honest answer is not exactly. Stocks produce dividends. They compound automatically, and they are highly liquid. Luxury bags, on the other hand, require careful storage, authentication, timing the resale market. However, luxury handbags can be powerful portfolio diversifiers. They behave differently from traditional markets, meaning during financial uncertainty, tangible assets often hold value better. And there's something else. A Chanel bag provides something stocks never will. You can enjoy it, carry it, style it, display it. It's both fashion and finance. So here's the fascinating truth. Vintage Chanel sits at the intersection of luxury, culture, economics, and investment psychology. It's not just a handbag, it's a symbol, a collectible, and increasingly a financial asset. But the smartest collectors don't buy Chanel just for profits. They buy pieces they love because the best investment strategy is simple. If the market crashes, at least you still have a beautiful bag. And honestly, that might be the most stylish portfolio hedge in the world.